give us a brief overview of the new NASDAQ OMX Government Relief Index?
Sure. The NASDAQ OMX Government Relief Index, or GRI, is an index designed to track companies that are receiving government relief, TARP money, bailout money, or some other kind of intervention from the government. Our whole idea behind this index was to create a performance benchmark. Are these companies going to perform over time better than the market, the same as the market, or less than the market? So there's been a lot of talk about the bailouts and the different programs, and we thought that the market needed a way to measure the performance of these companies.
Okay. And you were involved in the creation of this index, that's correct?
Yes, we were at the Super Bowl of Indexing actually early December, and we were talking about some of the questions that have been floating around that conference. One of which was, are bailouts a good idea or not? You know, are they successful or not? I mean, we've had a history of these. It's not the first time we had a financial crisis. But we said, well, maybe there's a way that we could put together something to measure the performance of these companies versus other companies, and actually put some kind of measures to it that over time we can see how they perform. The other question came up was this kind of a secondary question was, some of the stocks had been down, prices were so low that people said, boy, am I going to wish 5 years from now that I bought some of these stocks? And we said, well, maybe that could be true. Of course, it's a single stock risk. You pick a stock and it's one of the ones that fails. And so he said, maybe we put together a list, and that way there can be a basket, and you can look at it from an index approach as opposed to a single stock approach.
Okay, great. Can you briefly explain TARP?
TARP is one of the government relief programs out there. I think it stands for the Troubled Asset Relief Program. And essentially what I think the government's trying to do here, the Treasury Department's trying to do, is to shore up the financials of companies, financial companies primarily that have come under stress and duress based on these market conditions, by shoring up their balance sheets and doing the things, by taking equity positions and doing the things necessary to I think in their eyes, stabilize these companies so that they can still maintain their role in the economy.
Okay. How have investment banks and their service providers benefited from TARP and other government-sponsored relief programs? And what are the downsides of these programs, if there are any?
Well, there's a lot of people, it's a big policy question, and there are a lot of people who think the government shouldn't be bailing these companies out. They should be like Lehman Brothers, let them fail. Others think that they're critical and there's systemic risk if we allow companies like Citi to fail and things like that. So I think there's two sides to the debate. So the people, obviously the government has weighed in saying, we're trying to minimize the systemic risk to the financial markets, to the credit markets. We want to save these companies. The downside is that the companies that, in a free market, companies that don't perform, should fail, but of course, by many people. So I don't think the debate's out yet. That's why we created the index, one reason. Investment banks, all the investment banks have had to convert, the major ones have had to convert back to convert into commercial banks. So there's no pure investment banks left anymore, and of the big names that we all knew. So I think it's interesting. They've directly benefited because actually their financial statements have been shorn up recently here. And not all the banks wanted to take TARP money. The government wanted to make this a broad-based program and try to create no stigma attached to any single institution that we're trying to do this. So there are some companies that took it because they needed to. Some companies took it because they were asked to.
Okay. Now, your press release says the index allows taxpayers to gauge performance of the financial relief plan. If performance is poorer than expected, what repercussions could that have on future and current relief programs?
I think it's a great question. Every 2 years in this country, we have an election. We re-elect all the congressmen and 1/3 of the senators. And every 4 years is a new president. So I'm sure that 2 years from now, when the next congressional election comes along, people will be looking exactly at this issue, the performance of these companies compared to the market. If they perform the same as or less than, then people are going to question the viability of these programs. Now remember, it's just one measure, though. The performance of the company is not necessarily indicative of the multiplier effect these companies have. These companies do have other implications. There's jobs, there's the amount of credit in the marketplace, et cetera. So those have to weigh in as well. But I do think that it will be a measure that people will look at to see, about the efficacy of these programs.
Okay. Now, Susquehanna Securities is the specialist for the index. Could you explain their role?
Yes, they're the Susquehanna Investment Group has been the specialist for the index option that just launched on NASDAQ OMX PHLX just last Monday. And their job as specialist is to put up the first products, to put up commit their capital to the trading of the products and supporting the products. So they're essentially the market for the product. And they're a very experienced firm at this. So, they have been allocated they've been given the specials allocation to be the primary trader of the product, and they're the ones who are making the markets and committing the capital. So they're the ones who've actually created the product.
Okay. Now, banking and other financial institutions make up most of the index, clearly because they're receiving the greatest share of TARP assistance. Could you break it down further? What banks and financial institutions are included, and in what proportions?
Sure, and it is primarily financial services right now because, as you said, the companies with the biggest, the companies that have had the biggest crisis have been financial institutions, and there are repercussions throughout the economy. However, GM is in there, so there is one non-financial stock in there. What I think you'll see is that as other sectors and other kinds of companies may have to avail themselves of government relief over the next period of time, a year, 18 months, as we work our way through this crisis, then you'll see a broadening of the index of who's in it. But today, it's the 24 companies that have taken over $1 billion of TARP money that also have an option on them. We wanted the most liquid securities in there. That's the first version. Other indexes are coming, but that first one is the 24 that have taken $1 billion, and that's almost all financial services.
You just mentioned that other indexes are coming. Yes. Could you elaborate on that?
Sure, absolutely. There have been over 200 companies that have taken TARP money. So we only put this index out right now of the large cap ones with that have options on it because they're the most liquid, because we wanted to get a first measure out there. We're going to do a broad-based index that includes all the companies that have received TARP money, much more broader-based. And also the same phenomenon that's happening here is obviously happening in Europe and other parts of the world where the governments are stepping in and doing the same kind of programs. We're in the process now of evaluating that and should have an announcement soon about launching some European versions of the same concept. So where the index is today is we have an equal weighted index, and that's another important factor. We wanted to eliminate the large market cap bias of some indexes, so everyone has an equal weight who's in the index today. We're going to go to broader-based indexes in the U.S. We're going to look at a geographic dispersion of this kind of programs, and eventually sectors. So there's a lot of other indexes in the pipeline.
You said the index has been on now for about a week and a half?
We launched the index on January 5th. The first product came out last Monday.
And how's performance going?
The index has dropped since the day we launched it. It's down probably 30-something%, which is what you'd expect. But more importantly, I think for the index option, it's very volatile. These companies are in the news every single day. Every single day you're reading something about something going on with the companies or senior management, how they're performing, et cetera. And that news is driving movement of the company. So they're very, very volatile. And that lends itself very well in the short term to index options and those kinds of derivative products. So that's why I think that was the first one out the door. The first kind of product was an option.
Okay. There's been word we might see some TARP-based ETFs soon. Is that the case?
Well, this index has been looked at by a lot of people. So as I said, Susquehanna launched an option first because of the volatility. But this thing would lend itself, this index lends itself very well, the way it's performing today, in the short term to an inverse ETF. So that, obviously people are looking at that. And the other thing that, and traditional ETFs, long term, if you go back to one of those original questions, if you think 5 years from now these companies, because they've gotten government protection, they got government relief, are going to go ahead and outperform the market, then a traditional ETF is a good place to go long term as a low cost way to invest. So again, that's being studied by some of the ETF providers out there. In addition, there's been some interest in traditional mutual funds and structured products, and actually a future because of the volatility as well. So could be a suite of products on it.
Anything else you'd like to add for us?
No, I think we covered a lot. I mean, it's we started off as a benchmark because we think the market and taxpayers need a benchmark on these companies. Now it's clear from investors and traders that they want to participate in the movement of the index. We've seen that because of the rapid, speed at which a product was launched, and others are in the pipeline. And this is not a U.S. Issue alone, so we see it going in a lot of different directions, as we said, sector, geographic, and so on. So,
great. Thank you.
My pleasure. Thank you very much.
Thanks, John.
Sure.